Good morning, guys. Just want to report back on some of the research that we've done on the mortgage relief stimulus with the COVID-19. So, Freddie Mac and Fannie Mae and the Federal Home Loan Banks are taking some steps to help those that have been impacted by the coronavirus. And so, you may be eligible for some temporary delay in making your mortgage payment. And part of the stimulus, you won't incur late fees, you won't have delinquencies reported on your credit report, foreclosures and other legal proceedings will be suspended. And at the end of the temporary relief here, if you're still not able to make your payment, there will be some additional options available. So to qualify for the temporary relief, you'll need to reach out to the servicer of your loan. And so the servicer of your loan is who the company you're making your payment to each month. You can find their contact information on the monthly mortgage statement. There's usually a phone number or mailing address. So you'd want to call the servicer to request some assistance. Now, if you want to, before calling the servicer, to see if your mortgage is owned by Freddie Mac or Fannie Mae, we've included some links to their lookup tool, so you can see if one of those entities actually own your mortgage note. So if your loan isn't owned by Freddie or Fannie, don't be discouraged. There still might be some options available to you. Again, you'll need to talk to your servicer about those options. Now, it's important when you do talk to your servicer, make sure you're discussing a deferment, not a forbearance. Not all investors or banks are offering a deferment. And a deferment means they take the missed payments and put them to the end of the mortgage, right? So you'll still be accruing interest at that time. That's just added to the principal balance. And then those payments are just put out to the end of the mortgage. So, but after the time of that temporary relief, you'll just pick up with your normal payments. Okay. Now, a forbearance, the way that's different is that the payments, the missed payments, and the interest all need to be paid back in one lump sum once the forbearance period's over, in order for the your payments scheduled to pick up with the same amount. And if in the event you're not able to pay that one lump sum, then you're looking at doing a loan modification, which just is time consuming and it will have an impact on your credit. So again, make sure you're talking about a deferment, not a forbearance. Now, the one thing, some fees that you need to make sure that you're paying, regardless of a deferment, is make sure if you have an HOA, make sure you're still paying those HOA fees. Also, if your property taxes or your homeowner's insurance are not paid through your mortgage or through the escrow account they pay, set up with that mortgage payment, make sure you're paying for those as well. Okay. And then, lastly, you don't need to pay a third-party entity to help you with this. The servicers at the banks can help you for free, and if you do bump into, if you're just confused, it seems overwhelming, there are also HUD certified housing counselors that can actually help you through this process as well. And we've included a link to a list of HUD certified counselors here in Arizona for you to reach out to as well. So if you have any questions, please don't hesitate to reach out. But be safe out there, and just wanted to get this information out to you. Okay, bye-bye.